Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. Hope you all had a great weekend. Now, is that working? Yeah, that's working. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, don't forget all the tools that I'm using. So the broker charting software, the strategy I'm following, and so on is everything linked in the description down below. And the one thing, as always, that I recommend is if you haven't done so, go and check out the Elliott Wave principle, which you can read for free if or when you follow the link in the description down below. With that said, hi Olga, great to have you here. Hope you had a great weekend. And we're gonna jump right into to the charts actually. Let's check. We're starting slightly green into the week. I still have to finish something up on the other end on my phone, so just a moment. And we're starting slightly green into the week, although most of our positions appear to be red. As for the charts, let's start with our usual suspect, GameStop. Yeah, unchanged, still moving slightly sideways. Yeah, maybe we'll get the push down that I mentioned. Maybe we get a small push down, so maybe the correction already finished here. I think I've covered it often enough during last week's episode, so if you're curious about a little bit more detail, go and check out one of last week's episodes. And let's move on here. Since Olga is here, let's start by taking a look at No, which on our weekly chart hasn't moved. Oh, it moved upwards a little bit. So there was apparently, let's check a daily chart real quick. Okay, there we get the development. Okay, so there we now have two possible options. So, I mean, I got out of nowhere around here because we got very close to the 100% retracement level, and I still believe we will crush that or go through it. Although at this point, I have to say it looks like I got out too early. However, looking at the daily chart, we can see that this looks to be, so either two options, either the overall pattern that we had is still valid, and I got out, yeah, like, or I shouldn't have gotten out, and this is actually the end of the correction. And from here we get wave 1, wave 2, wave 3, wave 4, wave 5, and we go upwards. Or my assumption based on my experience with behaviors like that, so when we break through the 78.6 retracement level and get very close to the 100% retracement level, that then very often we will break the pattern and basically invalidate the pattern is accurate, in which case this appears to be the potential wave A, B, C, where the minimum target for the wave C would be around 38.95 cents and the 100% target around 50 cents. There's also still the unlikely but theoretically possible target at 72. So right now, looking at the daily chart, I would expect that it plays out like this. So we have wave A, we have wave B, we get wave C to around 50 cents. So I jumped the gun here by getting out of my position and could have actually waited a little bit. In that case, probably, I don't know, another week or so to get out somewhere here with a small profit instead of a small loss. And from here, we should then potentially get the next movement down that then will break, or that then would break the 100% retracement level. Now, as mentioned, based on the weekly chart, and if we zoom out a bit, yeah, a little bit too far, so now it starts loading. Yeah, come on, you can do it. Okay, so as mentioned, based on the weekly chart, there's still the possibility that this is wave 1 and wave 2 finished here, and then we're now in the early days of developing the third wave. However, based on the development that we had down here, so zooming in again a bit, I assume that we will get, or that this actually will turn into 1, 2, 3, 4, takes us to around 50 cents, and then wave 5 breaks below the 20-cent mark, and that might then mark the end of the corrective pattern. So personally, if I would still be holding shares, I would plan to get out between, what was the high here? Let's say between 40 and 50 cents to then potentially re-enter below the 20-cent mark. That's how it looks like based on the pattern right now. I think your average was around 30 something or not, if I'm not mistaken, Olga. So I mean, obviously, if you you know, like as always, make your own decisions and so on, yeah. But basically, the way I see it, you might have a reasonable chance to close your positions at a profit and then re-enter better later. But obviously there's also the risk. I'm wrong. You would close them somewhere at the 50-cent mark and then it goes up. Yeah, 0.38. Yeah, that's actually so that's actually a great average to have right now. So because like honestly, if we look on the daily chart, it looks quite nice. So I mean, I know we already have a lot of labels on there, but if we let's check here. If we take an extension here and assume that this is wave 1, 2, then we don't exactly bounce at the 1618 extension level, but roughly around it. So kind of like not a perfect indicator, but better than nothing in quotes. If we use Kennedy channeling technique here under the assumption that we are here currently in an impulse wave down, then this would be our so-called base channel. Move that back. So-called base channel and extend. And then our that would be our wave 3 in progress. And once we have now there are coming a lot of lines. 0.1, or assumed 0.3, 0.2. Okay, there we will not get a breakout. No, we might actually. So theoretically, based on Kennedy channeling technique, we would wait for a breakout to the top in this case from the channel to have a confirmed wave 4. However, I don't think we'll get to see that because that would mean that this wave pattern would have to drag out relatively long for this to happen. But I still think that we'll, as said, like get a push to this base channel, which would then be the minimum target around 38.95, which is unfortunately pretty much around your average. Yeah, I'm holding for plus $50. Yeah, of course. I mean, if you were to get out somewhere here, then it would not be worth holding for years. Yeah. But to be fair, if you get out at around 49 or so, it would still be a decent profit for right now. But yeah, so very often using Kennedy channeling technique, very often the fourth wave will touch the top or the median of the base channel, assuming that my labeling and assumptions here are correct, of course. Yeah. But if that's the case, then this would have said be wave 1, wave 2, wave 3, maybe wave 3 not even finished. So that could just be a part of wave 3, but if that were wave 3 finished, I would expect to set the push either to here, so the 38.95, or maybe we go a little bit higher and then here at the 100 mark, 49.31, or somewhere in between, get close to that median of the channel. That would still be a valid impulse wave because we don't enter the territory here. So if we go above 50.69, then we would have to consider other options. But so right now I would consider that there's still room up for a potential wave C movement. And I'm expecting then to get a fifth wave down, if that is already the whole third wave. Otherwise, this is only a part of the third wave. So we would get still the same correction, a push down, then another correction, then another push down. Either way, on the bigger picture, let's get rid of a few things here. Let's get rid of the base channel because it gets otherwise too confusing, especially if we zoom out again. So either way, on the bigger picture, we still have the option that we are here in a second wave. As I said, I just think that that second wave might still have one push more down to go. And hence closed my position when we saw the push through here happening. Again, should have been more patient to see the corrective pattern label out here or develop out here. But at the end of the day, like I didn't have a huge investment, so and therefore also not a really noticeable loss. So it's therefore fine, yeah. But yeah, I still think like right now that the pattern will play out more like this, so that we get a set like recovery, or in that case a corrective pattern till somewhere here, and then from there get our last push down, which should break through the 20-cent mark, and that might then mark the end of the correction. And then we get into our third wave. Yeah. Okay, that about no. Let's move on to costs. What's cost been doing? Okay, we're still going up. We bounced here around the 3618. So we have our potential, which also happens to be the 2618 here. So we're gonna have, we are under the assumption that basically we have our third wave finished here. As I said, very often or reasonably often, the third wave will bounce at the 2618 extension level of wave 1. So we have right now potentially wave 1, 2, 3, wave 4 in progress. That should like retrace a little bit more to form an ABC pattern. It's theoretically possible that that pattern already finished here, but considering that it took a couple of days to finish wave 2, I think that wave 4 is not finished yet, so that we should get a little bit more of a push down, and then we'll get our wave 5 push upwards. So still holding is okay. Entering right now, I think one can enter a little bit better. One could just add a Fibonacci retracement to what we believe, or what I believe, is the third wave, and then we would see that the potential entry point would be here around $8.60 per share, so slightly better than what's available right now. Of course, always the option, I'm wrong, we go up and somebody missed an entry, but again, that's what it looks like to me, so that we are in wave 1, 2, 3, 3 potentially finished here, considering the spot on landing. Yeah, so plus minus 3 cents that we hit that spot of the 26.8 extension level, and so 4 in progress, and then wave 5 up. Cost known, immersion. Okay, there we actually now broke further through, which is something I did not want to see, to be honest. Okay, let's decipher what we have here. So first of all, we have the assumption that this is our base channel giving us our wave 1, 2. And then that we're currently having our wave 3 finished here and are currently in wave 4. Now for wave 4, originally we thought we have our ABC and finish here around the top of the base channel, especially since we got the spike up here. However, now, second assumption would be that we have our wave, that goes here, that this is wave ABC, in which case we still would expect further retracement. And let's actually get rid of this, and we haven't finished the wave yet the way it looks. Remember, for each $3 move of band, immersion is moving $1. Not band, BNet. Yeah. I did not notice that correlation in the best case because of their ownership. Yeah. Yeah, of course, because they bought shares of, or because they own a certain portion of Noble Educational, so obviously that stock affects the other. Yeah. Either way, so like looking at the pattern here, we now also have the unfortunate option that this would be wave 1, 2, 3, 4, and wave 5, which would then only be wave A of a corrective pattern. So we would get a wave A, B, C, and then we would get another push down, which, if we zoom out a little bit, would then mean that we're potentially not correcting this wave here, but that we're correcting something bigger. Yeah, so originally I thought we were only correcting this, which would then, we're still in the area where it's possible. So terminating in this area here would still be possible, but then this would need to be A, B, C, and then I'm not sure if our wave C target would be okay here. So if we bring back an expansion, so probably we hit the minimum target or not. So yeah, so the minimum target for the wave C would be here around 977. The, in quotes, ideal target at 841. Yeah, let's zoom out a little bit further. One, two, three, four. I think that would work out. So, like, I mean, I'm not happy with the pattern. And again, there is a variation where we're actually correcting something bigger and are going further down. But I think it would work out with around here. So getting a little bit bigger retracement here to 840 to 876 to finish the corrective pattern. And then from there, develop then our next wave upwards. Yeah. However, there we have then to consider that this would need then to be a diagonal because it would enter the territory of wave 1. There's also the option that the correction is finished now. We have 899 here, and the low we had here is 905, because at the moment this would still be a valid impulsive pattern, 1, 2, 3, 4, where wave 4 does not enter the territory of wave 1. But if we fall below the, what did we say, 899 here, then we would have to consider this as a diagonal, which then becomes a little tricky because then it could only be wave one of a third wave, because a third wave always has to subdivide into an impulsive pattern and not in a diagonal or leading or ending diagonal pattern. Yeah, it's a little, that one's actually a little tricky here. Yeah. It's also possible that this movement up here officially finished here. So instead of having the high point here, so which very often would mark the end of a wave, the fifth wave doesn't always make a new high. So it's possible that that's the end point, and then our ABC would look like this. And then it would visually also again fit, in which case again it would be okay. We reached the minimum target, we went low here. So we'll have to wait a couple of days to see if we get another push down into that area, which will bring up, so as soon as we go into the, what did we say, 899 area, it brings up a lot of questions, but as long as we stay above 899, it's still reasonable enough to assume that we finished or potentially finished our fourth wave, in which case our profit targets here would be, if that's the end of wave 4, and we assume this is our wave top here, and yeah, like so our wave 3 starts potentially here, then we get our profit targets in this area here, so 15 to 19, or if our wave 3 start were to be here, then a little lower with 14 or 13.80 to $18 per share. Yeah, it's gonna be, yeah. What does auto labeling say? Let's throw it on the chart. Let's see. Okay, let's zoom out. Let's actually go to a monthly chart real quick. December 2002. Are we anyway labeled from back there? Or is that our labeling? No, that's our labeling. Okay, so let's set auto labeling up. Auto labeling to 2002 update. And now let's work our way in to this chaotic mess. So that's our labeling here. Yeah, it gets chaotic, yeah. Yeah, so auto labeling agrees. So similar assumptions that we basically have our big wave 1, 2 here, and that we, no, that's our no, that's auto labeling. Okay, so, and that we have our next wave 1, 2, and now wave 3, 4, and should get wave 5 to finish this third wave. So 1, 2, 3, and then we get a wave 4 and a wave 5. Yeah, so yeah, so we're gonna further assume for now that we are still in this third wave movement up. However, again, like there's a little bit more correction possible than anticipated. And yeah, there we go. So immersion, then let's jump to Barnes & Noble Educational, still yeah, moving more or less steadily up. Yeah, so I mean, there you actually have the discrepancies. So if you say, okay, for every $1 immersion, no, for every $3 Barnes & Noble Educational moves, immersion should move. We see that immersion has been moving down and Barnes & Noble's has been moving up. Well, let's actually compare the right thing here. So here we are going down since July 29, and July 29 is here. And we also were temporarily down, but we're actually way up compared to that. So here the high is 10.25, and right now we're at 13. So they are 30% up while immersion is down. So that relationship doesn't seem to hold up. Yeah, here it's still tricky. I mean, we could zoom in, obviously, and then, yeah, probably what's the low here? 605, and that low here is also 605. So potentially either that's the start of the wave pattern or that's the start of the wave pattern. Tricky because both have the same starting point or the same low point. Let's assume this is the start. Don't really have a clear break. I mean, we have a break here at the 338.2 extension. So that might be wave 1, 2, 3, 4, and now wave 5. And the wave 5 target for that would be potentially in the area we are right now. So minimum target was here, maximum target is here. So yeah, like considering that very fast and rough labeling, I would expect that potentially we get to see, I mean, there's also the No, there's only the 100% level for that target, yeah. So, but there's still a chance that we go higher as usual. I can always be wrong, but considering this, I would actually expect that we now-ish, so in this area here, get a correction to at least down the 38.2 retracement level, so which would be at $10.37 roughly, depending on if we end here or if we end up a little bit higher. So around the $10 area that we get an ABC play out here. Yeah, so much about that. If we zoom out again, it's obviously harder to label anything because of that huge movement that we had thanks to reverse splits and whatnot. I mean, the movement was there, but then with the reverse splits, it just puts it more into, or makes the price ranges appear, or actually the big issue is actually just that fluke candle down here, yeah, so that just does not disappear from our data source, yeah. So maybe let's stay zoomed in a little bit more so we don't have to deal with that fluke. But it's, yeah, I'm not gonna say guaranteed or so, but it's very likely that we actually finished our wave 1, 2 here, even with the fluke thing here, and are actually potentially in the progress of our third wave, where we are currently forming our 1, 2, 3, 4, 5 for wave 1, getting our wave 2, and then getting the next strong movement up, which would then coincide, I think is the right word, with immersion, or potentially with immersion finishing the corrective pattern here, and then getting the next impulsive pattern up. Moving on, Friday futures. Yeah, so we bounced here from the minimum target, although not substantially, but it's nice to see. So as said, we have a potential wave 1, either wave 1, 2, 3, 4, or wave 1 and wave 2 that then bounces, yeah, I mean, even below the 78.6 retracement level. Yeah, if we again go down here, then clearly there is no upward pattern and that thing will just go further down. But right now, let's zoom a little bit. There is the chance that this upward movement actually marks the end of the corrective pattern, and we are again in the progress of forming a 1, 2, 3, 4, 5. Yeah, so if we check here, we could zoom in further, but just roughly ballparking it here. Yeah, we see we bounce exactly at the 3618 extension level. And it's like so, I don't know, baffling how often that happens. So how often strong, so you have like some movement, a retracement that in comparison to the prior movement stands out a little bit, and then you apply an expansion, and very often, as said, the 2618 level will serve as the point of turnaround, or at least where there will be a break, or one of the other 61.8 or 38.2 levels, and it's just surprising how often that's the case. Now, here we could check something else. We have the rule of alternation. So if we retrace 38.2% here, we would assume, based on the rule of alternation, that we actually will retrace 61.8% here. So expect a further ABC movement into the area of 526 before we then finally would see a fifth wave. So from around 526, that would take us to around 1135 to 1828 in that fifth wave, and would then mark basically the end of the correction. But in this case, potentially either already the full fifth wave, 1, 2, no, that's the ABC. In that case, probably not the full fifth wave, but just wave 1 of the fifth wave movement. Then we get wave 2 and wave 3 and so on. Yeah, gonna be interesting to see and watch how that plays out. GameStop we already covered briefly. Again, more details in previous episodes. Green wave still just, yeah, on its slow pace further downward. Yeah, like there. Yeah, like what appeared to be as a developing Elliott wave pattern just turned into dust, and will just hold on forever to either see the company delisted or eventually do something, you know, stick figure, do something. Immersion, no cost, we already covered all of that. So Novavax, yeah. That's gonna be an interest. Where's the high here? 14.4, 49, yeah. So that's going to be now an interesting part of the Novavax call or Leaps call that I have, because that might be the end of the correction, and that might be the first wave up, wave 2, and then wave 2 correcting here potentially 38.2, which is pretty much on the spot. So we see that it's like plus minus 10 cents that we hit that level here. So there is a chance that from here we get to see our wave 3 up. There is still, however, also the chance that we stay below this deceleration trend line and get our push further down. Right now, I mean, I'm just going to hold the option because it's long term and the risk is like $95 or $94 for me. But right now, I personally would have my stop loss potentially at this point here at the low point at 866. And the take profit then, as said, based on this expansion here between 29 and 62. So I think the risk reward ratio here is still great. And yeah, I'm just going to hold my Leaps call option there until it eventually expires. Either I lose $95 or I make whatever, and we're going to see that. Now, any other SunPower? Yeah, I mean, yeah, we continue to dive. I mean, there is no data since there. Yeah, I should have noticed that. Yeah, like that's why might need to update the ticker. Yeah, that might be smart. God, yeah. So remove tickers, search SPWRQ. There we go. Yeah, new data. Yeah, not good data, but still data. So yeah, we mean they have filed for Chapter 11, so it's either they go bust or we see some miracle restructuring, and yeah, just waiting and seeing. And with that, we can move on to the bigger things. Let's start with NVIDIA. That now we had the bounce around the 2618, so to potentially finish this 1, 2, 3, 4, which means we would right now be potentially in a fifth wave. I think that wave 3 ended here, so, and then if that's the case, then we see that we have targets already around 140. However, I would take those with a grain of salt, and I would rather focus on the 139, 2618 expansion level that we have on the basis of this being wave 1, 2. So I think that we'll get towards 134 or 135, 139 to potentially finish this wave. I'm going to check in a second. Yeah. And then we get our wave 4, and then we get our wave 5. Yeah. So let's jump to cost. Cost makes some moves. Yeah, a little bit. On the big chart, it doesn't look that big, but obviously, yeah, it's like 7-8% in a day is not too bad. So we may not have finished this third wave yet, but might actually really still be in extension in this third wave. Then that would be 1, 2, 3, 4, and 5 should then push us into this area. And then we get wave 4, and then the next wave 5 would bring us into the area of 1160 to $12.05. Okay, yeah, so possible. Did we already retrace here fully? No, that's still a little higher. There's still a possibility that this is A, B, and C, so that there still is the push down. But yeah, overall, I think we'll have a small correction, even if it doesn't happen right now. Then I said, then we still go a little higher, get our small correction, and then we get another push, and then we should end up somewhere here for finishing this third wave, or maybe even on the 4618 or 4382 expansion level or extension level, and then we get another corrective wave and another push up. So I think there's still quite some room to grow in the pattern there. While it's not in detail very clear, so the more we zoom in, the harder it is to confidently identify if we already terminate wave 3 here, or if wave 3 might get another push into this area, for example. But overall, the pattern that this looks to be an impulsive 1, 2, 3 in progress or potentially finished, 4, 5 pattern seems to be quite clear. Now, we checked NVIDIA. We can check the NASDAQ, and I'm going to have a sip. Don't forget to hydrate. As for SunPower, Maxim holds the rights for SunPower in. I'm always astonished by how much you know about those things. So, like, I think there's the difference in dedicating like 30 minutes per day or dedicating a couple hours or more per day towards staying on top of everything. TCL is big in Maxim, still warrants to be exercised. Maxim produces the panels for SunPower. Ah, okay. One never stops learning, yeah. Boom, boom, boom. What do we have? Nasdaq still bullish, so 1, 2, 3 not finished. While in that third wave, we also might be looking at a 1, 2, 3, 4 movement, then a push 5. So while short term, there might be a little bit decline. Midterm, so not just the next couple of days, but the next couple of weeks, there should still be the push to 20,700 and then potentially higher, but I think that will hold here. So between 20,004 and 20,700, and then we get our corrective wave 4, and then we get our wave 5, and with that we correct the 21,000 potentially. No idea how, but that's how I expect it to move. So, and our SPY, same thing. Yeah, so we haven't reached the target areas yet that we expect for a third wave. And I think we have the same situation with 1, 2, 3 in progress, but not finished yet. And then within that third wave, potentially with 1, 2, 3, 4, and 5 to finish that third wave. Then we get a wave 4, and then we get a wave 5. So again, short-term potential for relatively smaller retracements. I mean, we still talk about like 1, 2, 3% or so, yeah, but still relatively small, so nothing as bad as this. But midterm still bullish here, and I think that's it for today. Yeah, so I haven't looked into Maxim, so let's check that one out. Interesting. Yeah, here we actually, I mean, I don't know how it is for you, but for me, it's like with the naked eye, I see an A, B, C pattern, which is a corrective pattern, which means, and it retraces 61.8%, which is one of the levels that we are the usual suspects for the termination of a corrective pattern, yeah, which brings two options without knowing the previous history. So without knowing the previous history, it brings two options. Either this is a corrective wave and will turn into A, B, C, in which case we can just throw an expansion here and get our profit or our targets for where wave C potentially should terminate. So we see here between 22 and 29 cents. Or this is the beginning of an upwards impulse, in which case this would be wave 1, 2, and then we can, instead of an expansion, we can use an extension, and we get our profit targets for a third wave move that are quite substantial here. Don't see any other pattern here. Like, I mean, long term, it seems like it's been going down. Let's actually look at a monthly chart. So maybe there's something bigger, but short term, yeah, so it's just been going down, okay. And weekly, same thing. So we just daily, we already did daily, yeah. So 4 hours. I mean, well, from here to here, there is not much room anymore, yeah. But theoretically, in a nice corrective pattern with so in a nice zigzag pattern, which is the most common corrective pattern, assuming we are in an impulse further down, so for the company to go bust, wave C would be identical to wave A, so the 30 cents mark would almost be, I mean, not 100%, but still a decent potential profit margin. And if we're talking about this being the end, TCL, we had that, thank you, maximum span of SunPower in 2020. Yeah, I didn't know that, yeah. That's why there's not a lot of data, okay, yeah. Thank you for always enriching the stream and providing me with things that I don't know, I didn't know. But based on the cheap price and based on the pattern, the way I see it, one could enter here, stop loss would be at 1430, so not too bad in terms of risk. Potentially we have our wave 1, 2, and then within the third wave, we have our next wave 1, 2 finished. and should now potentially see the third wave movement of a third wave. So it's the third wave of this bigger third wave, which should potentially be a strong movement. And one would just have to keep an eye on if we bounce here at 22 or if we bounce here at 30. But if we make it above 30, I mean, there's a third level for a wave C target, which is here at 46. But if we bounce at any of those three levels exactly, then it would be time to potentially get out, because that might just be an ABC corrective pattern that goes further down then. But if we make it nicely through them, that would be 1, 2, 3. And as said, the most likely target for wave 3 would be the 74 cents mark, which is quite a distance. Yeah, so let's actually, and I don't have much available cash, but a little bit is there. Yeah, not a fortune, but buy. What's it trading at? What was it? 18 cents. Yeah, so 100 shares, it's $18. So, and there are options as well. Oh, how nice is that? Yeah, so, but 400 shares are $70, which is roughly, my short-term target was 29 cents. Yeah, so I'm gonna circle back in a second. So 400 shares, buy. There we go. And just, yeah, balances, close.
Order filled.
Yep. So having a little bit of that, and then, yeah, there's not enough premium. Yeah, not worth to sell any short term. Yeah, no. Okay. Just making sure, maxing. Yeah. $0.29 would be, yeah, I think would be I don't know, like not a bad target. So because if this is only a corrective pattern before the company declines further, then it would be the perfect target. Yeah. But yeah, I don't know. We'll just have to wait and see. So I think, I mean, right now from a pattern perspective, both would be possible. This turns into ABC, so we turn around most likely between the 22 and 29 cents. So minimum target is not even a new high, so it should go a little higher than that. So, and that would be the ideal target. And in rare cases, corrective ABC also goes through that and reaches this point at most. But yeah, I buy and the stock drops. Interesting. Yeah. Doesn't really matter much that here because we're again talking about a very, very small amount. But I think it's possible. I mean, visually, this looks like ABC. It doesn't look like 1, 2, 3, 4, 5 in any way. And considering the movement that we already had here, it makes it unlikely that this is some kind of 1, 2. There would still be the option that we're looking at. No, like a flat correction would need to make a new high here. So I honestly don't see any other pattern right now other than this is a corrective pattern. And now we're getting, or we should get 5 more impulsive waves up. Obviously, if this were wave 1, 2 already finished, then this would be the next 1, 2. And so there's still room a little bit down. Theoretically, a stop loss could be at 16 cents, but I think the reasonable one would be at 14.30, so 14.3. Create alert. Yep. So that would be the point where this definitely is not a finished ABC pattern. And as long as we stay above that, I think the pattern looks like I said 1, 2, and we're in the process of forming the wave 3 up or a wave C. Either way, room up before it either, yeah. So if that would be just a corrective pattern before it then continues the journey downwards, yeah. Okay, and with that, we actually have it for today. That we don't need anymore. And I'm just gonna continue the rest of my day by doing some other things. So there are no options to sell here against those shares. Like, it's not worth it. and there's no bid for any of them, so hard to get any price. Okay, so we'll just hold the small share position. It's not a lot, but it's at least it's honest work, yeah. And we'll wait and see, yeah. Yeah, thanks. So thanks for tuning in. As always, Olga, thanks for sharing all those insights that I honestly did not know. It always makes, helps me learn and makes the stream so much better. I wish you all a pleasant rest of the day, a successful trading week, and then see you all tomorrow again, roughly the same time, 5 minutes before the market opens, with another episode of Daily Market Mastery. Until then, don't forget, like, subscribe, enable notifications, and that's it. See you then. Bye-bye.